Okay, I'm here. Hi, everybody. It's Uncle Bruce here with Stock Markets with Bruce. Welcome to my channel. Today's date is Tuesday, November the 4th, 2025. And what I want to talk to you guys about today are at the end of it all, I want to talk to you about some option positions that you can create to make some money on some stocks. Number one stock I want to talk about today is GameStop. And then there'll be a second stock following in just a minute. But I want to give you kind of an idea from my personal opinion. This is just my opinion. What could GameStop do to really get their shares going and to make them a lot of money? And in order to do all of that, I need to kind of go back in time with you a little bit, because some of you are watching me now. You've never owned GameStop before, or you once did, or you still have, or you've forgotten the story, or you're just not following it as intently as you used to. You should be following GameStop closely right now, because in the next 30 days, roughly, early December, the third quarter earnings will be released, and I think they're going to be very positive. And that will not hurt the big picture of what I want to talk to you about. It'll add to the big picture. First of all, let me show you a chart here that is quite old. All right, this is a chart that comes back all the way to January, probably 2002, 2000 to now. So this is a 25-year chart. All right, and I'm not going to spend a lot of time here. But you will note that when just before January 2010, the first third of this chart, the stock was in that looks like $10-12 range. You must understand something. The price of the stock before the big run-up was before the stock split 4-for-1. So back in 2007-8, the shares may have been around $40 a share before the split, but $10 after the split, $12 after the split. So that could bring it even to 50. Let's go forward back to January 15. It wasn't going anywhere. And look at January 2020. It was in the doldrums. That stock was as low as $2.70 at one point before the split. That would mean today it would be $1, not even $1. It would be about 80 cents, 90 cents, or something like that. It's irrelevant. It was nothing. However, in the latter part of 2020, it was found that the company had a massive short position, more shares shorted than existed, and a young man, around 33, 34 years old, named Ryan Cohen, started buying up stock in GameStop. And by the time he stopped buying, the stock was around $16 a share. He had 14% of all the shares. And at $16 a share, which would be today $4 a share, he stopped buying the stock. He spent $79 million or so to get 14% control of GameStop. The company at the time had $450 million cash in the bank with a $450 million IOU to Bank of America. They had 5,500 stores. We were in the middle of COVID. Everything was shut down, and it looked grim. However, fast forward a year, the shares had an incredible run, unbelievable short squeeze. On this chart, you see a high at just over the 50 mark. In reality, the shares were as high as $300 a share, even almost $400 a share, which will put this chart at 100. And it was a wild ride. Going forward after 2020, look at this chart here. This is the last year now. We're talking now December 24 to here. And in the last year, we've been anywhere in the 20 level as high as the 35 level, which means $80 to $140 a share pre-split, just to kind of take it back from the beginning. And the company in the last year, 2 or 3, has taken advantage of higher price of the stock to raise cash. Ryan Cohen has raised billions of dollars of capital, knocked off the Bank of America loan. They don't even deal with those guys anymore. And these guys are sitting on over $9 billion cash, $500 million in Bitcoin. They make money from their stores, which are now 2,200 fewer stores, from 5,500 to 3,300. and the company is growing its margins. But this is just a recap of the shares for the last year. This chart is the last week only, last 5 days. We've gone from this 23.50 level now to this 21.87 level earlier this morning on Gamestop. Here's another little recap for you on the company. Bear with me here. Key data. Coming down from the top, coming down, you can see the 52-week range, $20.73 to $35.81. The market cap is $9.9 billion. I find that amazing because the company has cash and Bitcoin worth $9.1 billion, whatever it is. Shares outstanding, 448 million. Public float, 409 million. Going further, PE multiple is 29.9. That's about to drop because I think the earnings per share will be raised, will be higher in the next quarter. About a month from now, we'll know. Going further on the bottom line there, short interest, 70 million shares are shorted. And that is about, 8-10% of the company. It's not very large. It's a small float of shares, a small percentage of the float that are short. Let me see if I can get rid of that banner for a minute. There we go. 17.4% of the free float is shorted, which is 70 million shares. And that includes the last issuance of warrants that were handed out to all shareholders to buy more shares at $32 a share until a year from now, and then next October, 11 months now, if they so wish to do so. We'll watch that closely. All right, so that is a recap of GameStop. Here's something else about GameStop you need to know and what I want to highlight, and that is this little analyst rating chart. The average analytical report on GameStop is an underperform, and if you go to the very bottom here, just above my finger up there, you'll notice it said number of ratings, 1. There is one analyst that covers this stock. Only one analyst that covers this stock. This stock is widely held by hundreds of thousands of people, of shareholders, retail shareholders. It is quite well held by institutional investors, and yet there is only one analyst that covers this company's affairs. The company is partially to blame for this. GameStop is very secretive. Ryan Cohen has been camera shy. He doesn't hire anyone to speak on behalf of the corporation, so we never know what's really going on. We don't hear a lot of rumors. He's not like Anthony Noto for SoFi, who's out in front of the cameras every chance he gets. So this is a different style. But anyway, that's a recap of GameStop for the last, 4.5, 5 years, micro recap. I like the company. I've always liked it. I love what Ryan Cohen has done with the corporation. I like how he's cleaned it up financially, raised a ton of money. I believe that this company is about to change dramatically in its style and in its game plan. They're going to continue to close out underperforming stores, which they should, making the stores that they have very profitable, which they are. And I think their profits will improve because they're getting into collectibles. But the corporation as a whole, the mother company, GameStop, is going to become, in my personal opinion, a holding company, and it's going to become an investment provider of other corporations. I think that this company is about to begin to invest in other corporations, take percentage positions, finance these up-and-comers, and let them grow to become much more valuable than they are now. And that will make not only the shareholders of these other companies very wealthy, it'll take GameStop shares to levels that we haven't seen in quite some time. This is, again, my personal opinion. Take it or leave it. One of the stocks that's out there that I think could be an interesting play for GameStop to get involved with is a company that has been founded by a creator, a founder, who has had success already in his field, has made a lot of people a lot of money, but is unfortunately now in a position where his personal health has now forced him to back away from the leadership position he used to have. He's replaced himself with a CEO to run the corporation. He's now still chairman of the board, but I think he will slowly but surely exit out of the company because he has to deal with health issues that are affecting his ability to lead. The company is in the software business. And I think that because Ryan Cohen is in his mid to late 30s now, still a relatively young man, I think he has a team that he's put together and will continue to assemble that will help and assist him in identifying the right kind of companies to invest in with real upside potential. The company that I am talking about here, I don't want to tease you anymore, is right here. It's called C3 AI Incorporated. If you take a look at the very top here, the name of the company is C3.ai Inc. Symbol AI. I think it's the greatest stock symbol in the market today. In the last 6 months, these shares were in the 20 to 30 ballpark, 25, 30 range until August. And then they came out with a terrible quarterly report and the update on the health of the CEO, and the stock took a beating. And now we're sitting near the lows of the year, the lowest price of the year, $14.70. Right now, $16.71 roughly, with the high of $45 in the last year. If we look at this chart here, this is a one-year chart where it was in the 40s back a year ago from now, roughly. If you look at this chart, this is a 3-year chart showing it between $20 and $40 between 2023, 24, 25. And if we go all the way back to the creation of this company, which is back in January 21, and this may have well been a SPAC, $150 at one time. Didn't last long, and it crapped out all the way down into the teens, back up into the 40s, and now here we are at $16.73. A quick little recap of AI, the corporation. You can see the 52-week range, which is the second line up there, $14.70 to $45. Market cap, $2.3 billion. Shares outstanding, 134.3 million. Public float, 124.6 million. They don't have an earnings ratio. They're not making money yet. But they do have a very high short interest position, 39.7 million. Let's round it up to 40 million shares short, which is almost 32% of the free float. This is a positive in my eyes. Here's something else that's interesting. In the financial statements of this company for the last 5 years, their gross sales have increased every year over the last 5 years, and they've pushed it from 183 million in 2021 now to the 389 million. And I believe in 26 and 27, they'll break through the 500 million or a higher number as the company continues to improve and grow its product and its customer base. Here is a key number that I like. That is their balance sheet cash on hand. How liquid are they? 742 million in capital. They're in very good shape. Their total asset value, taking away their liabilities, is in the 800 million neighborhood. And so they have 135 million shares out, and they have an $800 million cash net value. It's almost all cash. And so they're in solid shape in a financial setting. This chart here, though, is the key chart I want you to zoom in on. The stock is called a hold right now, and there are 16 analysts covering this stock. And that, my friends, is why I'm mentioning this stock today, apart from its liquidity, its upside potential, and the fact that the stock has dropped dramatically and is now priced just right for a company like Gamestop or someone else to make a move. And this is why I bring this to your attention today. All right, so that's a quick little overview from yours truly. All right, now here's the thing. All right, a company like GameStop with $9 billion in capital and Bitcoin and making money on their stores, improving their margins, which means they're going to make even more net profit as a corporation. They cannot use $9 billion to build 1,000 new stores. They're not going to do that. They're not going to create a giant strip mall position across the United States filled with giant GameStop gaming centers. I don't think so. This $9 billion is going to be used to make strategic moves into other assets, other entities. And one way to utilize this money is to go after a stock like AI. This is priced right and is at the perfect spot to take advantage of. I like the fact that at 16 something dollars a share, 16.71 here, you want to buy 10% of this company in theory on the open market just by buying up stock, just like Ryan Cohen bought stock of GameStop back in 2020. The cost to get 10% of this company is 1/10 of the market cap, right up there on the upper right. The market cap of, I'm sorry, not that one, right there. Market cap, $2.3 billion is the market cap of AI. 10% is $236 million. Yeah, if the GameStop company started to buy up this stock on the open market through option purchases, call options that are 6 months out, a year and a half out, 2 years out, as far as you can go, plus stock on the open market, they could easily get to 5% of this stock without moving it very much. The next 5% might create a stir because they're going to have to report after they breach the 5% level. And yep, the stock might well go to the $20, $22 level. But by the time they get to 10% ownership, the stock will be $20 a share, $22 a share. They'll have an average of $18 to $19. They'll be ahead of it slightly, and they've now got 1/10 ownership. This would put GameStop or anyone else as the single largest shareholder of the corporation. Seibel, the actual chairman of the board, only owns 3.3% of the entire company. A 10% shareholder would be the single dominant shareholder of the corporation. And I think what could happen is a friendly arrangement can be made. This doesn't have to be hostile. A friendly arrangement can be made where a company like GameStop that is cash rich can pick up 10% of this stock and immediately offer to fund the company with $500 million to $1 billion additional cash. And for GameStop, that would mean a total commitment of $750, $800 million to $1.2 billion out of their $9 billion. In effect, GameStop could go to AI and say, look, we're going to help you fund your company for the next 5 years. You don't have to go to the market to raise any capital. You can keep growing the company you're growing, grow the software. If this helps you attract even more talent, great, helps you push your product faster, further, farther, even better. But for GameStop and for AI, the arrangement could be that GameStop buys a convertible note that converts into stock over, say, a 5-year window. And the initial value of the deal is done at, say, 22 with a capped call financing swap arrangement in the 40s, mid 40s to $50 range. This would show the street that GameStop believes the stock can reach $50 a share. I believe that with the added funding in hand and the backer that GameStop would now be with $8 billion more behind it, AI won't have any issues about its survival. It could, in effect, be a takeover of someone else. AI could go after smaller software companies and gather them up and grow that way as well. Shares of AI, 25 to 35 a share wouldn't be an issue. And for the shares of GameStop, having 10% of the stock, 12 million shares, roughly 13 million shares, that are now practically double their value of what they paid for it, that would be a multi-billion-dollar plus win, because remember, they would have this option to convert into stock through the financing. Beyond that, the street, I think, would find it interesting. What I think will happen is, instead of having this situation here where there is one outfit that's watching GameStop, we will now have 16 analysts following GameStop. And with 16 analysts following GameStop, I don't think 14 of them are going to say, it's a bunch of garbage, get out, it's a blockbuster, sell this stuff. I don't think so. I think 14 of the 16 analysts will go, oh, GameStop is becoming an investment holding company apart from their GameStop business. Now they're doing this. They're already up billions of dollars in their first move. Watch for 4 more in the next year or two. That's what I think the street will think about GameStop's move into a move like this. For AI, it's a game changer. It shows the street that there's a big brother looking over them, protecting them. They are cash rich. They have new management in place now. The new management can move forward and continue to grow management. And the transition from the founder to a new group of people will take place. The shareholders will do very well with the increased tremendous interest and with the meme following that GameStop has over here, now being meme followers of AI in a much bigger way. Both stocks, I think, can actually grow higher. This, again, is my personal opinion on what could happen, what is a possibility to happen, and it might be that GameStop does do something like this, but with an entirely different organization. Maybe GameStop has already identified 2 or 3 or 4 companies that want to go public and are not yet public, and they are going to involve themselves in pre-IPO financings. And then when those companies do go public via the IPO route, GameStop might be double or triple their money already, but that could be years down the road. Can GameStop attract new analysts to follow their stock? Yes, but they need to get going and get active in the investment business. Looking at this AI stock as just an example, there are dozens of other companies like AI out there that probably all have 5, 10, 20, 25 analysts following each one of them. If GameStop can get involved with 3, 4, or 5 companies like AI over the next 3 years, they could theoretically have 50 different analysts following them, and with every quarter's financial releases going forward. And that would motivate Ryan Cohen and his team to be public about their various investments going forward. This is a potential future for GameStop shareholders, and in this case, like AI or companies like AI. If you like what I've had to say, give me a thumbs up on it. If you find that this is an interesting subject, more power to you. Now, I told you at the beginning of the video, I have an option trade for you on how to take advantage of this situation. On GameStop, I'm a believer that the stock will go much higher than $32 a share by next year. The warrants will all be exercised. The company will have over $11 billion in cash, and I think that their earnings are going to continue to soar. So I believe in the upside of GameStop. You can be a shareholder of GameStop if you want to be, or you can be a long-term holder of call options that expire in 2028 if you want, or you can play the conservative way to buy into GameStop, and that is be a cash-secured put writer. And here is a chart of options on GameStop that expire January 26, coming up in less than 3 months. And as a matter of disclosure, Jen and I have written the $25, right up here, $25 cash-secured puts. We have written these at $5.50 a piece quite a few months ago. They're sitting at the moment in the 420 range. The stock at $22, just under $22 a share, means that these puts have a book value of about $3 odd, $3.10, $3.20 a piece. And if they were to expire today, they'd be closing at $3.25, and Jen and I would be up about $2.25 a contract. No problem there. I believe, however, between now and January, we're going to have an earnings report in the first week of December for the third quarter, and I think the shares could be higher than where we are here. And even if they only reach $24 with no other developments, these contracts will be worth $1, and we'll be buying them at $1, $1.50, and we'll be quite happy with a $4 gain on our position. You could, in theory, write 25s or 24s or 23s or 22s that expire January 26, only in about 70 odd days, 80 days, and take advantage of anywhere from the $2.20 mark to the $4.20 mark in premiums based on which option you want to write. If you want to go further out and you believe that a story that I've just told you is a possibility, that GameStop may get involved in a series of public companies, then you may want to take advantage of January 2027 contracts, which have 13 and a half months to live, 14 months to live, where you could write the 25s and get in the 660 range, the 23s, in that 5 range, 22s in the 435 range. Those bid and asks you see over here are quite wide, and so you have to give a little, take a little there. But these could be puts you could consider writing for January 2027 on GameStop. I will tell you this much. If GameStop were to get involved in what I just told you, involved in a public company with 16 analysts, these contracts will trade like crazy along with the shares themselves. It'll just light a fire. On AI, if you think that AI is a possible company that might be infiltrated by money from the outside, like GameStop, then you could do this. You could then write January 26 put contracts. Don't have to buy the shares. You could write either 15s or 1750s with the stock right now at roughly 1660 a share. You could write cash secured puts in this neighborhood where you would haul in about $1.36 for the 15s or $2.35 for the 1750s. These contracts are only 2.5 months in life. You want to go further out, like Jan 2027, then you'd be looking at these contracts here. The 15s would bring you about $3.40, and the 1750s would give you about $4.75 a share per contract. So you put up $1,750, collect $475 against it. And if the shares go over $1,750 between now and next year, January, on this kind of an arrangement or any other kind of arrangement, those contracts will be worthless, and you will keep all $475 or $500, depending on what you can get for these 1750s. And again, the 15s on the top. The $15 contracts, you need $1,500 to write them. And if you can bring in $340 on a $1,500 position, you're bringing in over 20% on your money for 13, 14 months of time. 1750s, of course, at about $5-ish a piece, you're not quite at 30%. You're about 27.5%, 28% return on your money for the 1750s. You have to decide which way you want to go. Learning all of this is paramount to understand. You have to understand how this all works. And if you're going to become an option writer and you really want to make money in this market, you need to get to my website. And this is where you go to stockmarketswithbruce.ca right here. And you start taking my lessons, which I put up 19 for you now, that you can review all about how options are created, how they work, why they do what they do, how you write them, how you buy them back. It goes on and on. Here's my front page of my website. Click on the classes heading there. You'll see this page, and just start scrolling down the page, and you'll find the classes, number 1, number 2, and so on. You can go all the way up to 19 of the different classes. You will learn all about writing put contracts, credit spreads, poor man covered calls, you name it. We've covered all, even talking about how to properly price contracts when you write them, how to buy them back for the best price possible, the psychology of the markets, advanced strategies. 19 classes waiting for you. If you are really serious and you're not fooling around, you want to make real money with your retirement funds, your savings, then I would suggest head over there. There are 19 classes. You can buy them one at a time, watch them as many times as you like, and learn all about option writing. And that way you can take a look at stocks like AI or stocks like GameStop, or any other stocks out there that have options trading available to them. And away you go. Thank you for joining me today on this short video, 30 minutes. Unbelievable how long it takes. There's so much to learn about this market, and if you're serious about making money, you're going to seriously put some time into it, because after all, you worked very hard for the capital that you've saved. Now it's time to make your money work for you, and you have to direct it in the right direction, in the right way. And so, if you like this story about the GameStop AI situation or whatever, it might be worth your while to consider an option strategy on it. Thank you for joining me. Give us a thumbs up if you like these videos. Let me know in comments below your thoughts, and we'll keep you posted on this whole thing. Like I said, this is my opinion. I like GameStop. I like AI. I like the long-term future of both. The question is, would it be one that merges them in some way, or are they going to go the way they are now? And are they both going higher? One goes first, one goes second. Stick around. We'll find out. We'll keep you posted. Thanks again for joining me. All the best to all of you. This is Bruce, Uncle Bruce, saying bye for now.